So, about a month ago, I put out a video showing that NVIDIA as a company recently purchased two brand new AI stocks last quarter. If you want to watch that video, I'll have it linked down below for you. But another thing I mentioned there was that while they bought two new stocks, they also sold four of their biggest positions. Three of which, by the way, were complete exits, meaning that they sold out entirely out of those AI stocks. It was a pretty shocking move that I haven't really seen anyone talk too much about, but I've gotten questions from you guys asking me about it, so I'm not going to leave you hanging like that. We will quickly run through these stock sales, and I'll give you my general opinion on why I think they sold out of these and whether I plan to buy these stocks myself now. Does that sound good? If so, then please consider hitting that like button and subscribing. Helps keep my channel alive. Thank you for that support, my friends. But with that said, let's go ahead and jump straight into this list here. Now, just for a quick recap, NVIDIA has become so large now that they actually have their own investing division that buys stocks in the market. This all owned by NVIDIA as a company. And because it's so new, well, those investments were growing at a very fast rate. They were really spending many millions of dollars every quarter buying up smaller AI stocks. But then out of nowhere, they just decided to sell a big chunk of those at the end of last year. It was over $100 million worth of sales, including four different stocks that we'll run through right now. The first of them being a very shocking sale of ARM Holdings, ticker symbol ARM, which they sold over 40% of their position in the quarter. And I'll come back to this screenshot here in just a second. But the reason why I say that it's shocking is because ARM is actually a really critical designer of chips. In fact, ARM as a chip architecture is the most popular, most used architecture in the entire world, which chips are then built on, including, by the way, around 99% of all smartphone processors out there, which is massive market share. And then ARM, of course, as a company, is able to collect royalty and licensing fees on every single one of those. Well, not to mention, by the way, the fact that NVIDIA themselves have even partnered with ARM too for designing new NVIDIA chips on ARM and for AI and supercomputers and so on too. The point being that to now just all of a sudden, start selling the stock, it is very surprising. But if you were to ask me then why are they selling out of this one? Well, my best guess would have to be that the stock just rose by too much and they really just wanted to lock in some of those profits by selling 40% of their position while still holding on to the rest of it because of how valuable, they realize that this company is long term. Excuse me, guys. But yeah, if we go back to that portfolio screenshot here, we can see exactly that. We see that the average buy price, now this is just an estimation here. It's based on average prices from the times that NVIDIA bought and sold. But we can see that NVIDIA was likely to be up over 80% at the time of sale. And that's only in around 1 year's worth of time. So, it was pretty big gains that they saw very quickly, which if we just look at the stock overall, we can also see how it really had been climbing by so much during that time up until this year, where it just so happens that NVIDIA also disclosed that they were selling out of it, and then the stock started falling back down. Now, to be fair, the overall market has also been struggling this year too, especially in tech stocks over the past month or so. And overall, I still think ARM is a pretty decent stock to own long-term regardless, as the technology is very impressive with ARM chips, being great for smaller devices in particular because of its simpler, more battery efficient architecture compared to x86, which is great for stuff like the Internet of Things and smartphones and even more powerful stuff too, like even bigger computers, even supercomputers too, depending on what you're doing there. But as the technology evolves and gets better, there will be more things you can do with ARM, which NVIDIA themselves just saw so much potential in that they literally tried to fully acquire ARM Holdings before it got blocked by regulators because of how powerful it really would have made NVIDIA as a company. But even on its own, ARM is doing a great job, usually growing sales by around 20% or more, with profits also breaking new record highs. Yet the only reason why I've never bought the stock myself is just because of that valuation. I mean, you've got a PEG ratio of 2.4. They currently sit there north of 43% more expensive than the sector, and that's even after the recent drop in the price. And to give you even some further context on that, NVIDIA trades for only less than one of a PEG, and that's over 50% cheaper than the sector too. So, considering those valuations, I would much rather just buy in more NVIDIA stock rather than ARM because, well, NVIDIA has the cheaper valuation depending on the metric you look at, but they also, I just feel, do a better job of diversifying into more AI adjacent markets, especially with their software and AI platforms that they offer too. But yeah, look, while ARM was a 40% decrease for NVIDIA, these next three stocks were 100% dumps, meaning NVIDIA completely exited out of each of these positions. And coming in at sale number 2, well, we have Serve Robotics, ticker symbol SERV, at a 100% sale. And this one too was actually pretty surprising to me, particularly because NVIDIA had only recently started buying them 2 quarters prior. So to sell out so early now, it is kind of alarming. Now, I'll get to why in just a second, but if you've never heard of them, Serve specifically develops and operates electric robots for the services industry, as the name implies, including food delivery, and plans to expand elsewhere too, which I do think there is a lot of future potential for. And already we've seen companies like Uber and 7-Eleven partner with them, even ordering like thousands of their small delivery bots for Uber Eats. However, the path to profitability remains a very long one, as this is a company that is still bleeding on the bottom line with much more in losses than they even generate in sales. And if we go back to NVIDIA's portfolio here for a second, we can see that they were estimated to be up by over 270% on that position. So, if NVIDIA was up around 80% on ARM, who's profitable and much more well established, and they had that position for longer, yet they still decided to sell a big chunk of it, then yeah, there's no question why they would want to sell this one too and lock in those really quick 270% gains that they made in just a couple of quarters, right? You just want to make sure you lock that in, don't want to risk losing it. The interesting thing now, though, is that after NVIDIA disclosed the sale, well, the stock for Serve dropped from over $22 a share all the way down to less than $7 today. And to be honest, that's kind of attractive for a spec stock like this, considering, 2 things. Number one, the huge revenue growth that analysts are expecting from them in the coming years. And number 2, the giant addressable market that Serve estimates to be worth hundreds of billions of dollars long term by 2030. However, it's still a stock that I've never purchased myself for a couple reasons, that being the huge losses, making this, a very speculative stock that I already have too many of at the moment, to be honest. And coupled with that is the rich valuation, because even after the recent crash, the stock is still up over 160% since IPO, and it carries a price to sales ratio of almost 150. And at that rate, they would have to consistently grow revenues by hundreds of percents every single year for many years into the future just to get to a more reasonable level. Because typically we consider a good PS ratio to be around 1 or less, but certainly not 150. Again, as a spec play though, knowing that you could lose some money on it after the crash, I think it's okay for some people if they really like it, but it's not one that I feel like betting on myself at the moment. So I can understand why NVIDIA sold and cashed in some of those profits. And really this next stock here is going to be even more of the same thing as this one. They were up even more on at over 375% gains. And that was in SoundHound AI, ticker symbol SOUN, which they also completely sold out of now. I will say though, SoundHound is a much more popular stock these days, I feel, and the business has been on fire, expanding from just being, that music search app on your phone to now being a fully fledged voice AI and speech recognition company that uses artificial intelligence to provide conversational AI solutions for other businesses, specializing in natural language processing, what we call NLP, and voice-enabled search technology, allowing companies to integrate voice assistants into their products and services, or even help them build their own voice assistants too. with just a few examples being White Castle, Jersey Mike's, Krispy Kreme, Mercedes, Honda, Kia, Square, Qualcomm, and more, either using it for their drive-thrus or their automotive assistant and infotainment systems, or even for customer service and HR applications too. And with NVIDIA, they even partnered on their Drive platform, integrating generative AI like those found in ChatGPT and Google's Gemini. So it's all very impressive work, which sent their financials soaring to new record highs and the stock price right along with it. That is until this current year, where it proceeded to crash and lose more than half of its entire value. So, considering how much Nvidia was already up on that position and how it crashed by so much right after, well, I definitely can't fault them for selling, as it looked to be the right move in hindsight. However, going forward, I do think that SoundHound looks a lot more attractive here, especially as a speculative play on the future of AI and especially in voice AI. So I wouldn't mind owning a small piece of it after the crash just in case. But for me, the issue continues to be that I already own a few risky AI stocks as it is. And because this one is not yet profitable and they trade for a sky high price to sales ratio of almost 40, it's just not the right fit for my own portfolio at this time. I know some of my viewers own the stock though, so let me know down below how you feel about this situation. Having said that, while those three previous sales were after huge profits, this last one here might be the most surprising of all, because NVIDIA was actually down on their position. So why would they sell? Well, let's take a closer look at it. The sale was in a company called NanoX Imaging, ticker symbol NNOX, which they completely sold out of despite being down on that position by about 8%. Again, that's just an estimation based on average prices, but at the very least, we know that they likely couldn't have been up by very much on it and were more likely to be down on that position. So why would they sell here? Well, Nano, if you're not familiar with them, this one might be the most speculative of the entire bunch here, because they are a very young company, kind of a startup really, that has only a tiny presence out in the market. Just a handful of countries have even approved their products, which are various imaging platforms and systems. Like, for example, what they call their simplified X-ray beds or their lightweight 3D tomosynthesis imaging systems, which they claim to be much easier to scale up in terms of cost and simplicity, but without compromising on detail, accuracy, or efficiency. And that's also alongside their NanoX cloud platform that uses AI to enhance and improve the diagnostics while also expanding its reach, kind of globally because of the use and the reach of cloud computing. Well, it's all very impressive work too, just like the others, and clearly NVIDIA saw potential here and an opportunity really to partner with them to kind of help them maybe scale up and grow larger, while in return, NVIDIA gets some much needed exposure into healthcare tech and those kinds of AI fields that can also be super lucrative for NVIDIA down the line. But as a stock investment alone, it just seems that NVIDIA didn't really want to take on the added risk here. So my guess is that they see this more so now as just a company that maybe they want to partner with business-wise, but not necessarily one that they want to be, investing in on a stock basis where they could potentially lose a lot of money. Because even if things went, south for Nano, NVIDIA might look at it like, well, at least on the business side, we may have, learned a few things from them. Maybe we made some new partnerships. Maybe we even start thinking about acquiring either Nano or some of their technologies if they go, fully under, which we'd be in a much better position to do now, having already partnered with them and understand all of their ins and outs, right? But as a stock investment alone, that's more so just kind of a gambling on them being successful, which, to be fair, usually works out great for NVIDIA, because whenever they announce that they're investing in a new company, tends to send that stock soaring, which they can then sell out for a huge profit like we're seeing now. But in this particular case, it looks like the stock has just been kind of struggling a bit more than usual. So NVIDIA just kind of decided to cut their losses early and not risk taking a bigger hit later on down the line. As for me though, I'd rank all of the stocks in the following order. I think ARM is by far the best, most reliable company of the bunch. And it's a stock that, while I don't already own myself, it's one that I wouldn't mind at all owning in the future. Maybe I will. But then I'd probably put SoundHound after them as a more speculative play, just because of how much growth they have. I think Serve might go just right under them. Although I would understand the argument for the two kind of being tied, but I just think SoundHound maybe looks a little more attractive valuation wise too. And I kind of like their technologies and software a little more too. But then finally, I would put Nano at the very end. And again, that's not because I'm not impressed by what they can do. I actually think they have done some fascinating work, but as a stock investment alone, I just feel it's a little too speculative for my taste at the moment, so they'd probably go in last place there. But hey, those are just my thoughts. What do you all think about these? I'd love to hear your thoughts down below. Make sure you drop a comment. Thanks again for stopping by, my friends. I hope you're all doing well. I'll have more videos coming out for you guys very soon, so I hope you're excited for that, but I'll catch you in the next one. All right, take care, everybody. Bye-bye.